Hi everyone, Mark here from Vadino and Co. There's been a lot of misinformation and a couple of misconceptions from that misinformation regarding cryptocurrency and tax in Australia. So I thought I'd make this video just to clear a few of those misconceptions up, and then also give you one bonus tip at the end of the video. So first misconception is that you don't need to pay tax on gains from cryptocurrency in Australia because it's a digital currency and it's not treated as an investment. Wrong. The ATO view cryptocurrency as an investment or a capital item, the same as they would say a share on the ASX. So basically, you'll have your cost base, so whatever these coins cost you, and when you sell them at some point in the future, you'll make a gain or a loss, and that gain or loss will get taken up under the capital gains laws, and you'll have to pay capital gains tax if you've made a profit. So that first misconception is just flat out wrong. The second one is that you won't have to pay capital gains tax because your brokerage firm or exchange is not going to report your information to the ATO. Wrong again. These A lot of the bigger exchanges now anyway are reporting that information to the ATO, and the ATO is putting pressure on pretty much across the board all the exchanges to supply that information to them. So even if you do find a smaller exchange that isn't reporting to the ATO at the moment, there's no guarantee that in the future they won't be. So you wouldn't want to take that risk of not reporting your gains on your tax return and then at some point in the future go through the hassle of an audit and possibly some pretty big fines and penalties. So don't do that. Um, the final misconception is that you don't need to pay tax on swaps between different coins, different crypto coins. So that's wrong as well. I can see how people would get mixed up with that because even though there's a transaction taking place, you're not actually converting it into Australian dollars. Um, but because the ATO view these coins as an investment or a capital item, each time there's a transaction where you're swapping coins, that's a capital gain event, and it basically gets treated the same as it would if you were selling the coins outright or transferring, converting into Australian dollars, basically. So uh, that leads me into my tip, tip of the day. um, Keep good records. So it goes without saying, anything to do with tax, you should be keeping good records anyway. But especially if you've got multiple swaps between coins or multiple trades throughout the year, every single one of those trades is a capital gain event. So you need to work out the gain or loss on the individual coins or those individual trades. So let's say you had purchased uh, one Bitcoin, you had swapped it for 1,000 XYZ coins. You need to know what that cost base of that one Bitcoin was, and the market value of these 1,000 Bitcoins when you made that transfer, and calculate whether or not you've made a capital gain or loss on that event. So keeping good records is important. For these records, you'll need to keep for each transaction basically that you make. When you're purchasing from Australian dollars, you'll need to keep the purchase date, the amount of units, and the type of coin that you're purchasing, and the market rate that you're purchasing it at. If you're swapping between coins, you need to know what, again, the purchase date, the trade date, what the number of units of the coin that you're swapping from, and the type of coin you're swapping from, and the type of coin that you're swapping to, number of units, and the purchase price or the market value of each coin at that date. So keep really good records of all of that. Save yourself a lot in potential bookkeeping and accounting fees when it comes to tax time if you don't. So I hope that's helped you out a little bit and cleared up some of the misconceptions. If you've still got questions, feel free to give us a call. Otherwise, we will see you next time. Happy trading.